Days like today don't happen by luck, they happen by preparation. Welcome back to Your Nifty Guy. I hope all of you are doing well. Today, the market gave us a clean, directional move, and more importantly, it respected the plan we discussed in advance. No random spikes, no unnecessary noise, just a trending session that rewarded discipline and patience. In today's video, I'll break down exactly how the structure unfolded, why the trend was clear early on, and how sticking to the plan helped avoid overtrading and emotional decisions. I'll also talk about what this trending move means for the coming sessions and what kind of mindset you need to carry forward from here. If you're serious about trading with clarity and consistency, make sure you watch till the end, like the video, and subscribe to the channel because every single day we focus on reading the market before it moves, not after. Also, I have started a Telegram channel. The link for the same will be in the pinned comments as well as in the bio. So make sure to go and subscribe to it. It is a channel where I will be sharing in my views and stock market related important updates only, no spamming, and there will never ever be any courses or any paid Telegram tips or trade setups which will be sold to you guys. It's completely extension of ways in which I can connect with you guys. So make sure to go and subscribe to that as well. Tomorrow again will be a no trading day for me. I am traveling. I have an early morning flight at 7 a.m. and I will be reaching the factory at around post lunch itself around 2 o'clock or something. Uh, so I will not be because of the travel, I will not be trading tomorrow. But then today, what a day it has been, guys. I also put it out on the Telegram channel about if I hope you guys have capitalized on the plan that we built yesterday. Now, I had clearly mentioned that this is a level, so I had a long bias only throughout this week, right? In all the videos I had been sharing that I have a long bias, but if market breaks down below this particular level with a pullback, I will short it with the regular quantity, right? Because if you're getting a trade in the opposite side of your bias, we usually go with a lower amount of quantities, right? Not with the regular full guns ablaze, but with a calculated risk, right? But then I have clearly mentioned that if we are going back below this level, after a pullback, we can go absolutely crazy with the quantities. And if you can see, uh, this 10-15 candle is where I had entered into puts. Markets opened with a small gap down, gave us a closing below our level of interest, gave us a good pullback, kind of formed a double top. Now, I do not consider this as a double top. This is simple sideways consolidation after this up move came in because a double top needs to happen after an up move, right? Not at a down move, right? So this is what most people get confused with, thinking of this as a double top and maybe they take an entry right here. No, this is not a double top. This is simply a sideways consolidation in which the market is moving before continuing in the original direction. And the right entry is absolutely at the break of this particular low, which happened in the 10-15 candle out here. And this is where I entered into puts with a small stop loss of right above this. Not a small stop loss, actually. On the options chart, the stop loss was coming around to 26 points. But then it is what it is. And The pullback was good, very good, decent pullback with good structure, right? So this was a no-brainer. Absolutely, the preparedness came in handy. Entered into puts out here, and I exited in this particular candle. Now, of course, I know the market moved further down, and had I been holding to the trade, but we could have gotten some more profits. But then I follow this particular system of the three candlestick rule, wherein this candle had, because we're in a short trade, this candle had a higher low, higher high, as well as got a closing above the previous candle's highs, because of which I exited the trade over here. Now, I captured around 40 points in this particular trade, and Siddesh from the community had messaged me stating that he was also in this particular trade, but then he also exited somewhere around here. He took the trade in Sensex, but Sensex and Nifty are like mirror images of each other, and he took the trade in Sensex, and he I believe would have exited around this level as well. And it is my and he messaged me that it is paining, causing a lot of pain to him, seeing that after his exit, the market has actually moved much more beyond. Uh, and he could have capitalized on the same if had he just been simply holding on to the trade. Now, my message to Siddesh as well as anybody who is a follower of this community, so there has to be one fixed system, right? So I follow the system, not necessary that you can follow. You can use an EMA, you can use a super trend, whatever suits you, you can follow that. For me, because I am into option buying, I believe that even a slightest move which goes against you, that should be your cue to exit. Of course, we could have re-entered out here, but then again, looking at the quantum in which the market had already moved, I did not intend to take any further trades, and 40 points is what I had booked in throughout the day. That this is the only single trade that I had taken, and anybody who would have re-entered out here would again have been, as per my method, would have been stopped out around here, right? So it is not possible humanly, even for the best traders out there, to capture this entire move, right? So Nifty fell from the day's high. If you capture, uh, Nifty fell by almost 300 points, right? 1%, 275, 276 points. And it is not possible for anybody to actually capture the entire move. So that is something which I always tell you guys, that there will always be a regret in the world of trading. If you are okay with that, this is the place for you. If you are not okay with regret, trading is going to be, the journey is going to be very, very hard and difficult for you, because whatever you do, even if you're doing it everything to the T, uh, there will be some regret or the other, right? Because sometimes you will have the regret of maybe the markets would have reversed from here, and then you would have thought, okay, had I followed my system and exited out here, it would have been a good trade. When you exit, the market continues in the direction, and you have regret that why did I exit out here? Markets, I could have captured some more profits. Sometimes you leave profits on the table, sometimes you give away some profit that you've already earned just because of the greed. So that is something which you need to make peace with, and the best thing that can help you do this is by following a rule-based setup, right? So for me, once I am in a short trade, any candle like this, that's my exit cue, right? Something going against with me in a trade, in an option buying trade, is where I would definitely exit. And what was even more confident about today's trade setup is number one, last day was extremely, extremely sideways, right? A good doji, and after a sideways day, which is a volatility contraction day, comes a volatility expansion, right? So it is not necessary that it would have come today, but then yes, of course, this level which we had pre-marked on the charts made it much more easier for us to execute the trade, to enter with confidence. And what a lovely trade it has been. I am happy with the 40 odd points that I captured, because that is something which you have already planned for. And sometimes when the market moves as per your plan, and you get a good enough trades without what I mean by a good enough trade is wherein you do not, the trade does not cause you too much of a panic or a situation wherein you don't know what to do. Should you hold? Should you exit? That kind of situation, right? Out here, the trade simply moved in your favor as soon as you had entered. And a big part of it can be attributed to Mr. Donald Trump. Today's fall, which had come in, it was extremely painful to look at the portfolios. Uh, but then today's fall, which came in, was simply because of the 500% tariff warning that Donald Trump had imposed. Kind of spoken about against India, Brazil, and China, who are importing oil from Russia. And that is something which I believe caused this entire fall in today's market. There was a panic, and most of the stocks, right? So the advanced decline ratio was also, the market breadth, like we call it, was also extremely poor. Most of the stocks were uh, were trading on the negative side. But then again, my because I will not be trading tomorrow. Uh, the US Supreme Court is also likely to rule on the tariffs, right? So if the decision goes in Mr. Donald Trump's favor, Indian markets may see further downside. If the ruling is against Trump, the US markets could also face some sharp selling. So uh, there is a bit of a crucial uh, juncture which we are at, keeping in mind Mr. Donald Trump and his frivolous statements that he keeps on making. So, for Indian markets tomorrow and Monday will be very, very important to watch. So in case if you are not too aggressive or your risk averse, I would suggest to wait it out, let the news and let the clarity come in, and then maybe you plan the further trades. But then, if you want to trade tomorrow, of course, the setups we will be discussing them. We don't need this. We don't need this. The daily time frame fib level has done its job. We have also gone back below the last swing, which I had been mentioning in the last couple of videos, which is the important swing, right? So this was the important swing. So this is the entire up move from the last swing till here, from which we had marked the fib levels on the chart. But then if you see broadly, we are in a tight range box still, right? So maybe a good enough move or a trending move can be captured only once we are out of the structure, right? Maybe if we are breaking out above the all-time high, or we are going back below this weekly time frame fib levels. So that is, those are the two areas post which we can get some good enough trending moves. But then out here, yes, this was a good example of a breakout failure, right? The breakout happened and it failed completely. We have now reached the, even breached the, not the reach, but breached is the word. We have breached the last swing which we had formed. So for tomorrow, we'll keep the plan of action very simple. Number one thing is tomorrow I'm expecting the markets can be a bit tricky, as in it can be a little volatile and sideways as well, because today was a good trending day. And like I said, volatility expansion is followed by volatility contraction. Let's see what tomorrow's price action has in store for us, but we will nevertheless, like always, we will be prepared to handle it in the best possible way, right? So this is the fib resistance now. We'll mark it in red. And this is again the daily fib levels. And this is with regards to this swing as well as today's low. In case if we breach down and break today's low tomorrow, these levels will need to be readjusted. They will come down a little bit, nothing major. You can adjust those in the live markets. But then again, plan of action has to be very, very simple. Number one, we can expect a trap setup tomorrow. All those people who would have missed today's rally, if we see a bearish candle at the start of the day, going back below today's low, giving us a good closing, showing that fresh new buyers have entered, fresh new shorters have entered the market or sellers have entered the market, and then the high of that candle gets taken out. That's our cue to go long for a scalp trade. Now, this is simply a scalp trade which is against the primary trend. The primary trend right now is bearish, with biasness being on the bearish side. Below today's low with a pullback, of course, we can see some more pain and move on the downside. Out here on the 15 minutes time frame, there is an open-ended divergence. Uh, Although we can, for intraday purpose, I will still avoid going long for the time period now. I'll focus on the daily levels only that we have, right? Above this will is the place where we intend to go long. And if we approach these levels and we see some negative price action, we can up. So of course, look at shorting the markets. So yes, this will be the simple trade plan for tomorrow. I hope the plan of action is very, very clear. And tomorrow, my suggestion will be to stay light again. Uh, the US decision, Supreme Court decision, will be coming in post the Indian market. So let's see how the market behaves tomorrow. That is why I said that tomorrow, as well as Monday's price action, is going to be important and will be deciding the future uh, course of action in which Indian stock markets will be moving in. But let's just hope for the best. And once again, days like today are a reminder that the market doesn't reward predictions, it rewards preparation and discipline. When you have a plan and the patience to execute it, trading becomes simple, not easy, but definitely repeatable. If this breakdown helped you, make sure you like the video, subscribe to the channel, and share it with someone who's serious about improving their trading. We'll be back tomorrow with a fresh view, a fresh plan, and the same focus on clarity over chaos. Till then, remember, trade the plan, respect the risk, and let the market do the rest. Cheers, guys, and thanks for tuning in.